Startup Central, and let's now put the spotlight on banking technology startup Zeta that has secured $50 million recently. That was in an equity funding from United States-based healthcare and financial services firm Optum. Till now, the company has raised $340 million in total from SoftBank and Mastercard. Now, Zeta was started in 2015 and it offers a cloud-native full-stack banking technology platform. It has operations both in the United States as well as in India. And to discuss about the latest fundraise, I'm now joined by Bhavin Turakhia, the global CEO and co-founder at Zeta. Thank you very much, Bhavin, for joining us here on ET Now. Let's first start with the fundraise. Tell us about who the investors were as part of the fundraise and how are you looking at deploying this funding?
So the investors, it's a strategic investment by sort of a group in the US. And in fact, the way this came about to be, Sumita, in fact, is that Zeta wasn't explicitly looking out for investment in any form. Actually, our first and only institutional fundraise took place in 2021 when we had SoftBank, Mastercard, and a group of the marquee investors invest about close to $300 million at that point at a pre-money valuation about $1.15 billion. And we kind of, committed to the path that we would turn profitable with just that, one and only institutional fundraise. So this time around, we didn't explicitly go out looking for investment. And so in some sense, I have a boring answer for you is that we don't really know what, there's no specific designated use of this capital, but it certainly acts as a great safety buffer, adds on to our cash reserves. We already have a certain amount of cash reserves from our previous investment, and this will add on to our cash reserves to ensure that it provides kind of a safety buffer while Zeta continues on its path to become profitable by March 2026, and then beyond that, continues strong growth in terms of revenue and profitability across our two primary markets, which is US and India.
So in over, or at least about a year, you're looking at profitability for the company. But Bhavin, as a platform, you help banks and fintechs launch financial products like credit cards, bank accounts, and loans for individuals and businesses. And that really is built on a modern cloud-native API-first architecture. But as a company, what are your priorities going to be now that you have a fundraise as well?
2025 priorities, I would say 70% is towards delivering on some really large contracts and deals that we've signed in both US and India. We currently have about 25 million accounts hosted on Zeta's platform. These are credit cards, deposits, loans, debit, prepaid, etc. And then 30% of our focus is on signing new logos and new clients in both these markets. Our focus has been in the US predominantly on the top, roughly about 150 to 200 banks and financial institutions, and some of the larger fintechs. And in India, it will be the top 30 to 40 banks and financial institutions and some of the larger fintechs in India. And our goal will be to kind of work with them to really shift them from legacy technology, mainframe-based systems, non-cloud native platforms to we started out with this vision of democratizing banking, and our strategy is to basically make banks faster, make banks more profitable, and make banking experiences more delightful for consumers. And our way of doing this is by providing modern technology and platforms to banks and fintechs to enable them to take these further to their consumers.
Right, Bhavin. Let me also ask you about, a question that pertains to the overall industry. Now, previously as well, Zeta closed a $300 million funding round, while, startup winter funding has, of course, sort of evaporated. However, later stage funding is still a concern for the industry. Early stage, while that may have improved, give us a sense of what are investors looking at now with respect to investing in companies and startups.
Question. Sorry. So Zeta had close to a $300 million round before this, and we haven't raised anything in between. One of my other companies, Titan, closed a $30 million round, I think about 3 years ago. But, I think in many ways, the markets are pretty frothy. Even when we raised our institutional fundraise in 2021, what has ended up happening now in the last 2-3 years, and rightfully so, is that investors are focusing on the right metrics, on break even and profitability sooner, on sustainability sooner. To me, the real test of the sustainability of a business is getting to profitability as soon as possible. Granted, in some markets, enterprise software, etc. The process can take time. The investment horizon is longer. We've invested close to about $350 million to $400 million in building Zeta's platform. So certainly for us also the journey to profitability is slower in comparison to kind of some more, let's say, mid-market or micro SMB B2B SaaS businesses, which can end up becoming profitable faster. But I think investors are focusing far more now on the more relevant metrics of profitability, LTV to CAC, payback period, potential scale, and actual sort of relevant business metrics versus kind of more proxy metrics that used to be a focus in earlier sort of investment eras, such as GMV or top line multiples or things of that basically. And so I think this is a great outcome in my opinion for everybody, because the right companies will get the right amount of capital to be able to sort of grow and sustain.
All right, Bhavin. Now, you of course mentioned at the beginning of this interview that this recent fundraise, this investment serves as a buffer. Now, many companies are considering IPOs now, and Zeta is around 10 years old. Would this investment add to your capital reserves for a potential IPO?
I think firstly, it's a great sign. I think the ultimate affirmation for startups in any ecosystem is when multiple startups reach a maturity stage where they can access equity capital markets and participate in them to reduce their cost of capital and so on and so forth. So I think it's highly encouraging. I think each successful story on the public market is highly motivating and encouraging to the entire startup ecosystem. Zeta's long-term path will certainly be an IPO, but so I can give you kind of the two answers. In the long term, will most likely end up listing somewhere. We haven't yet decided where. It's not the right time. In the near term, to look at an IPO path, and largely because we're blinders on, heavily focused on chasing fundamentally the following goals, which is increasing the number of clients and logos. We currently have about 5 to 6 large banks and fintechs and dozens of smaller ones, but we want to kind of add another maybe 7 to 10 really large financial institutions across both our primary key markets as customers. We certainly want to cross over into sort of profitability and more than double our revenue and increase our profitability meaningfully. And so once we've achieved those goals, and we want to take some of our clients that have signed up with us over the course of the last 6 to 12 months, we want to take them live, add additional several millions of accounts on our platform. Once we achieve those 3 categories of goals, I think it would be perhaps the right time to contemplate and discuss if it is strategically sort of relevant for us to potentially look for an IPO path, but right now that's not a priority at all.
All right, so that's not a priority for you, but Bhavin, when you say that you're looking at a long-term roadmap for this, but what are the timelines that you're looking for listing on the bourses? And of course, when that happens, would you be listing in India or overseas?
Great question. So timeline-wise, I don't have a timeline. What I can say is that it's not the next 3 to 4 years, is my assumption. But the truth is, given that we haven't spent any time deliberating or contemplating it, I'd be hard pressed to give you a specific timeline. I can't really predict the future there. And the same goes for the location. Both locations, US and India, which are our primary markets, do offer several advantages. There's a large number of mature companies in the US that act as benchmarks for this particular industry. Significant portion of Zeta's revenue originates from the US. And so certainly those would be relevant factors, to consider the US. India, on the other hand, we leverage a large pool of, talent in India. We've been based in India for the longest period of time in terms of sort of investments that we make. And the Indian IPO markets are also fairly rewarding and extremely mature now in the last several years. And so I think there's pros and cons to both. And I think the decision on where we would list would be contingent on what makes strategic sense at the point in time where we even start, journeying down this path.
All right, so still some time before that decision is really taken, but you're keen on both the markets, the United States as well as India, for the kind of offerings that both of these markets provide to startups like yourselves. On that note, thank you very much, Bhavin, for joining us here on ET Now on Startup Central. Well, ladies and gentlemen, with that, it's a wrap on this edition of Startup Central. Hope you liked the show as much as we did putting it together for you. Don't go anywhere. The news comes in on the other side. Thank you very much for staying with us.